Hello guys, welcome to my channel. In this episode, I will be explaining to you in details what candle range theory is and how to apply it in the market. Candle range theory is an essential concept that comprises of three candlesticks. This is similar to ICT power tree concept, but then the difference between candle range theory and ICT power tree concept is that candle range theory is not time dependent, while ICT power tree concepts depend on the time that you are trading, right? ICT power tree concept explains price, accumulation, manipulation phase, and then distribution. The accumulation usually happens during the Asian session, which is also called as Asian range, and then the manipulation during London Open, and then distribution in the London session or New York Open. Now, candle range theory gives a similar impression of accumulation, manipulation, distribution, but in a very different dynamic. So this pattern, as you've seen it here, comprises of three candlesticks. And then the first concept to consider, or the first thing to consider in a candle range theory is price manipulation, right? Manipulation of price. By the way, this is usually a reversal pattern or a continuation pattern, right? When price is trying to reverse it or change direction, or where price have retraced and wanted to continue in the same direction, right? So you can trade price reversal and price continuation using a candle range theory. Now let's get into the detail. Now, the first thing is to mark the highest point of the last candlestick. The highest point of the last candlestick. That is the first thing. Not the highest point of the last candlestick. And then, by the way, this have to go in line with your higher time frame analysis. This has to go with your higher time frame analysis. For me, if price is trending bullish, I would love to see these setups in a continuation pattern, right? Trying to trade the continuation using candle range theory. And mostly, I look for candle range theory on a daily candle or on a weekly candle. Also, I can use it sometimes to trade a counter trend pattern, because once you see this pattern in the market, you're beginning to have that feeling that the market is trying to retrace or change direction, right? So the first thing is to mark the highest point of the last candle. Now, the second thing we need in a candle range theory is price taking out the highest point of the previous candle, that is the immediate candle, or and then retracing back to close below the high of the previous candle, right? This is a clear manipulation. If price would have closed here, if price would have closed above here, what does it show? It shows that the price will continue, right? The price will continue. That means we have a break of market structure above the previous candle high, right? Now, we have price closing below the high of the previous candle. This is the first thing you need to note in candle range theory. Taking out of the previous high and then closing below the high of the previous high. Now, another thing I want to tell you is that it doesn't matter the color of the candle that took out the price, the previous high, and then closes below the high. It doesn't matter, right? It could come from a price could open here and then trade to this point, retraces, and then close here after taking out this high. In this case, we'll have a bullish candle. If price open here, trade down first, and then retraces, trade to this point and retrace back, we'll have a bullish candle. But then in this case, we have price close opening here, trade to this point, then retrace below the high of the candle, then trade all the way to this point, and then retraces and close here, which means we have the open here and then the close here, then the high and then the low of the candle. It doesn't matter the color of this candle. What matters here is price taking out the previous high and then closing below the high, right? So what I usually do is that I usually want to see the low of the second candle being taken out. So, however, guys, you could have something like this, right? You could have something like this where the first candle, right, where the first candle is actually a large candle like this, right? A large candle like this. So what is more important is taking out the low of the second candle. Once we take out the low of the second candle, we automatically have a shift of market structure. We automatically have a market structure shift here, right? We have a market structure shift here. So you can go on a lower time frame to look for whatever confirmation you want to look for. But then in some cases, immediately price take out this high and then close below the high. After the close, I want to see what this price will do, what this particular candlestick will do. Because sometimes you have it retrace here and it will come back again and then close above the high before the candle closes, right? In this case, we have a break of market structure to the upside, which means price will continue going up, right? Right. But as soon as I have the close of this candle and I see that the price I've taken out the high and close actually below the high, I can go on my lower time frame and start looking for trade even when we've not taken out the high of this candle, because the low of this candle, because the low of this candle sometimes might be your TP or the low of this candle, right? For early entry, right, I would like to start looking for trade immediately. I have the close of this candle and we did not close above this high, right? But for high probability setup, you want to see price taking out the low of this candle, the second candle, to show that price is actually willing to shift to the other direction. Yes. So this is in a bearish scenario and this is in a bullish scenario also. We would love to see price taking out the low of this candle and closes above the low of the candle, showing that the bears are not able to continue by breaking the structure here, but it only took liquidity below this low and price is willing to shift to the other direction. So immediately we have a break of this high, right? You can start looking for a buy setup. Another thing I want to tell you about candle range theory, right? Candle range theory gives a good and decent opportunity in a ranging market, right? If you want to trade ranging market, you can use candle range theory to actually catch some few pips, right? Because it's not favorable to be trading a ranging market, right? But if you master candle range theory, you can always get some few trades, right, in a ranging market. Example, here we have price ranging here. Price is ranging here, and I have these 2 points. Can you see what happened here? Can you see what happened here? What happened here? We have price taking out the high of this candle. Can you see it? Price took out the high of this candle and then closes below the high of this candle, right? The first step, I told you, once you have this thing, you can go on your lower time frame and begin to look for a trade, right? You can begin to look for a trade, right? If you want a high probability trade, then maybe you can have to look for a price breaking below the second candle before you continue bearish. But most of the time, if you want to scalp, right? If you want to scalp in a ranging market like this, you want to start looking for a sell setup as soon as the second candle closes. As soon as the second candle closes. So can you see what really happened here? Can you see what really happened here? We have this low, high that has been taken out, and then price come to give us a market structure shift here. Can you see it? So if you trade a breaker block, this is a breaker block. This is a breaker block. Price retrace into a breaker block, right? Price retrace into a breaker block, and then continue lower and continue low. So another thing I want to say is that price is fractal. You most likely see it on a lower time frame too, right? The same candle range theory we saw on the 4-hour is still playing out on the 1 hour. This is a confirmation that it will play out in taking price in the other direction, right? Can you see how price took out the high of this candle, right? Price took out the high of this candle and closed below the candle, right? Immediately there's a break below this candle. We know that price is going down, right? This is exactly at this breaker block of 15 minutes, right? In a bullish condition here, you will see price taking out the low of this candle with this big wick and then closes above, right? Above the candle, right? Closes above the low of this candle. And immediately we have price going up from here. So this is a very nice, right? This is a very nice setup to trade in a ranging market, right? In a ranging market, can you see this order block? If you're looking for where you place your stop loss, right? We have a supply zone here, right? Can you see the reaction from the supply zone? You could place it maybe at this point if you don't want to, right? Like the highest point of this price is very large enough, right, for your stop loss. So you can place your stop loss above this demand zone, right? And scalp in this ranging market, just like I told you, right? Candle range theory is favorite in a ranging market, right? So for this bullish condition, this is the low that has been taken out, right, in form of manipulation. Can you see the whole of the manipulation here? Can you see manipulation here? On a higher time frame, do we have a shift of market structure immediately after taking out this? And there is no shift of market structure. At what point do we have a shift of structure? At what point do we have a shift of structure? We have a shift of structure here, right? Can you see this candle? Can you see this swing point? Can you see how price took out the swing point, right? Took out the swing point and retrace into this fair value gap, right? Retrace into this fair value gap. You could place your stop loss here at the low of this fair value gap too, right? So that price will not take you out. Maybe price will most likely want to retrace into this lower fair value gap. You could place your stop loss below this fair value gap. So this is all about candle range theory, guys. I hope um I hope you like this video, and if you like it, click the like button and don't forget to subscribe for more content of this nature. Thank you and have a great trading day or week, guys.